Let us see this in practical scenario or in practical question. So we're gonna have Binko CO has an item of land carried at its books at $40,000 2 years ago. This is a carrying amount. And 2 years ago, due to the slim in land value, led to the company to reduce the carrying amount from 50. So this company conducted revaluation before 2 years, and they found that before 2 years, and this is the original value. Original value was 50,000, and the carrying amount at the time 40,000. 40,000. So this was taken as expense in profit or loss. So there was revaluation. So we have three values here. We have original value, which was 50,000, and before 2 years, the entity conducted the revaluation. So the result was 40,000. So the difference was short in 10,000. This amount expense in profit or expense out in profit or lose. So now we have our asset value was 53,500. The debit entry would be, the question is, account for revaluation in the current year. The solution is, the double entry is debit, credit, and credit. As we said, asset value will increase due to what? Because 53,500 minus 40, the carrying amount, is $13,500. This is this amount. Our asset value will increase in the statement of financial position, 13,000. And before 2 years ago, we spent out 10,000, and we reverse this 10,000 in profit or loss, and the remaining shall be recognized in other comprehensive income and the revaluation surplus. The question, the scenario number 2, examples on revaluation decrease. Revaluation decrease. Let us simply exchange the example given above. The original value was $50,000. The land value raised it up 53,500 2 years ago. However, the value of land now was 40. So the original value was 50,000, and the value raised it up before 2 years, 53,500. There is increase in the carrying amount of the assets from 50,000 to 53,000. It's mean increase of $3,500. This is increase. And now our land was 40,000. So account for decrease in value. So this 53 500 minus 40, 13,000 and 500. So it means this is lose. We have lose 13,500. Before 2 years ago, we had 3,500 as revaluation surplus. We will reverse this amount as debit, other comprehensive income, 3,500, and remaining amounts shall be debited directly to the profit or loss, this 10,000, and the asset value will decrease in the statement of financial position by this amount, the same amount, this plus this 13,000. Let us move to the third scenario, revaluation and depreciation. Dalian Co. bought an asset for 14,000 at the beginning of 2000x5. It had a useful life of 7 years. Let me delete this. A useful life was 7 years. On January 2008, after 3 years, the asset was reevaluated to 16,000. There is surplus of $2,000. The expected useful life has remained unchanged. So there was no change. There is no change in our expected useful life for the asset. 4 years remaining. It means the total years are 7, and up to the 1st of January 2000x8, 3 years, 7 minus 3, 4 years remaining. The question here, account for revaluation and state the treatment of depreciation from 2000 and 2000x8 onwards. Solution. On 1st of January 2008, carrying value of the asset shall be 14,000 minus the remaining years into the carrying amount divided by the expected value, expected useful life 7 years. The result would be, so the initial depreciation is 14,000 divided into 7 years equal 2 years, each year 2,005. This is the depreciation into 3 years, total 6 years. The total is 14,000. 14 minus 6, remaining 8,000. So for the revaluation, the debit would be the debit side would be accumulated depreciation 6,000, and the also debit side asset value, because our asset increased from 14,000 to 16,000. The increase shall be recognized as in the statement of financial position and asset side. So the credit shall be revaluation surplus is 8,000. So 2, this is accumulated depreciation, and this is asset value. So the depreciation for the next year will be 16,000 divided by 4 years, remaining years, equal 4,000. It gives us $4,000 for each year, compared to the depreciation cost at the previous measurement, 14,000 divided to 7, $2,000. So each year the extra 2,000 can be treated as part of the surplus which has become realized. It means this depreciation, it's already been realized. So we need to reverse this 2,000. So debit the revaluation surplus and credit retaining earnings. Thank you so much. This is the end of the measurement of property, plant, equipment. See you in the next chapter, depreciation.